What is up, you guys? Pete DiCarlo here, and so today's been crazy. This whole week has been crazy. But Reddit and Wall Street Bets have kind of taken over the market once again. We've seen a lot of things like BlackBerry, AMC, Clover Health, Wendy's, like all these companies getting short squeezed over the past couple of weeks. And I made a video on Clover. I made a video on MindMed. I made a video on AMC and GME. All of those today and this week. So go and check out our second channel, Traders Helping Traders, if you are interested in those. That's the channel I kind of keep a lot of these daily, technical analysis videos on, and try to keep this more for like fundamental videos. But when I was, making these videos, going through a couple of these articles on CNBC, which normally is pretty good. I found this one article saying Reddit mania and inflation risks are a recipe for a serious summer pullback. Julian Edelman of BTIG warns. So I kind of want to just quickly watch this video and talk about the state of the market and do I trust the market? So let's just take a look and let's just watch this real quick.
Would be the catalyst that would result in the S&P 500 to fall?
Well, we're looking sort of at a more holistic view. From our point of view, the broad rally that began in March of last year at the pandemic lows has further to run in both time and price. But when we look at where the market is right now and this sideways action of the last 2 months, we've got some yellow caution flags up. The biggest of which is that the fact that inflation, the Fed's preferred core PCE, which printed 3.1%, anytime that number's risen above 2%, the average monthly return for those periods is minus 1.6%. You couple that with the fact that we've had the lowest bearish reading in the sentiment survey this past week, not seen since the beginning of 2018, just before the Volmageddon episode. We think there's a recipe for a pullback within the longer term uptrend right in front of us.
So overall, I mean, it's like to even just add the Reddit mania, like the Reddit mania, it does affect the market, but really what he's speaking about is inflation risk. And for a potential summer pullback, once we get up over those numbers, we normally have a pullback of about 1.6% return on the S&P 500. And now I did touch base a little bit about this whole Reddit frenzy in that Clover video and in that the AMC video that I made. But you have to realize that when money is going into these short squeeze stocks, it's coming out of other things, right? Because Reddit and Wall Street Bets does have a lot of money from a mass standpoint and from a mass psychology standpoint in order to manipulate things. We've obviously seen that. However, it's not like there's as much money, as much movement that they could actually pump a stock without massive short squeezes themselves. They could, but it would just be a lot harder. Now, what I was trying to explain in that video is that all of that money comes from somewhere else. So when we saw the whole, first push on AMC, GameStop, all those things, there was a massive rally. Then kind of the wind got sucked out from under AMC and GameStop back on these initial pushes in February. And then from February on, we saw these big movements in crypto. So crypto, more specifically Bitcoin, Ethereum, they've been doing really well over the past year. But if you look at Dogecoin kind of happened towards the end of March, which is right when all that first wave of short squeezes happened. And we saw Dogecoin from March go from half a penny all the way up to freaking highs of 75 cents, which is a 1,000% return. So you could say that a lot of that short squeeze money and profits was pulled out of those squeezes and pushed into things like Dogecoin, as well as things of Bitcoin. So if you look at Bitcoin, when we pull back here, we take a look at, January from right around February and continued up, we did see more of a rally into Bitcoin. And now we're seeing Bitcoin still, up around 33,000, but with about a 50% haircut in just the past couple of months. And now we're seeing more money get put into these short squeeze companies. You look at things like Ethereum, more money is getting pulled out of Ethereum, ETH/USD. So more money in the past couple of weeks has been getting pulled out of Ethereum, and it does look like Ethereum is probably going to pull back down to 1,746. And I will probably make a video on that because I would like to own some Ethereum at 1,750 range. But overall, this money has to come from somewhere else. So as far as Wall Street Bets affecting the market and causing the market to crash, I don't really see that happening. One thing that Wall Street Bets could in fact impact is how much Wall Street shorts a company and the amount of short interest that we could have looking at stocks. So like, for instance, if you're a Wall Street hedge fund, you know, continuing to short companies that have massive short interest might not be a smart move for you, because that means that it can be targeted, you can be exploited, and the things that are happening right now can happen, right? So obviously that could change the landscape of shorting companies in the long run. But if we take a look at the S&P 500, now from a long-term fundamental standpoint, technical analysis does not really matter when you're looking at like wedges and you're looking at bull flags and stuff. It does matter, but like from a long-term fundamental standpoint, it's not that big of a deal. But what I do like to watch from a fundamental standpoint is trend lines and price levels. These are extremely important. So if I zoom out, I kind of made a video about this on the S&P 500 not too long ago. I'm looking at a weekly chart, which means each one of these candles represents 1 week. And we're looking right now from 2012, so 2011 actually, September 2011, all the way to today. So 10 years is what this chart represents. And there are a lot of major price levels. So obviously the first price level is here at $212. We obviously have another price level right here at about $300 or $3,000 if you're looking at straight up S&P 500, which was a massive level that we broke during the P word. I don't want to say that, but a massive level that we broke during then. And then we have another good price level here at 340, and then a smaller price level at 360. But overall, you can see these are the major price levels. Now, if we take a trend line and we go from this bottom here, and trend lines don't have to be perfect, right? We're not trying to perfectly touch each little candle end, but let's just overall set a line of how the S&P 500 has been trending over the past couple of years. Obviously, this S&P 500 has been trending up for the past 10 years. But one thing you'll notice is that as the S&P 500 gets away from this trend line, it always pulls back. So, we had this pullback here in December and September of 2015. We continued to push up. We kind of tapped this resistance point, pulled back down here, December of 2018. If you guys remember that, the market shaved like 16% off in the last 2-3 months of the year, push back up. Obviously, the Rona happened. Now, I do think that we would have seen a pullback in that time frame, not to the magnitude that we saw with the Rona, but we did bounce from there. And now we've continued to push up, continue to push up, continue to push up. And just looking overall, right, at the past 10 years, would you say that we are overpriced? And that, it looks like we need a pullback. Yes. Yeah, I mean, obviously. Now, is that going to be inflation? Who knows, right? Is that going to be Wall Street? Wall Street bets? I don't believe so. But I do think that overall the stock market is extremely overvalued, and most people could say that. Now, I know a lot of friends and people who are just super bearish on the market, thinks the market's going to crash pretty soon, and I'm not completely against you, but it's one of those things like you have to realize that during the Rona, we printed a lot of money, right? We printed a lot of money. Now we have life that is going back to normal, and some could even say is doing better than before, right? If you look at a lot of restaurants, if you work in the restaurant industry too, comment down below. But if you look at a lot of restaurants, they're doing better, not through the pen, that word I can't say because I'll get demonetized, but now they're doing better because they have actually a better takeout system. There are a lot of, any restaurant I go to is packed on Thursday, Friday, Saturday, Sunday, to where I can't even get a spot anywhere because they're doing so much with outdoor seating now, because so many places have more outdoor seating now with 100% occupancy during dining hours, and then also the takeout business. You have a lot of money in general that is being pushed into the United States economy. You have low interest rates are continuing to get home buyers to sell houses for ridiculous prices and continue to buy up more and more properties because it's freaking cheap. Like, it's not that the property is cheap, it's that unfortunately this is not what you should do. But unfortunately, a lot of people look at what their mortgage is going to be. Oh, I can get a $1 million house for a mortgage of $4,000 a month. That's absolutely insane, and it is. But overall, I do not trust the stock market. I am bullish on the United States economy, but I do believe that we need a massive pullback. It doesn't mean that the stock market's going to dump overnight from 420 down to 340. I don't think so. But doesn't mean that I wouldn't be surprised if the market does pull back down to 400 in the next couple of weeks. I wouldn't be surprised if in July the stock market's back down to 400, the S&P's down 400, that's 10%. I think a correction has to happen. I really do. You know, if we look at a correction, that's a 10% fade plus. That means that we'd be back down at 380 or even back down at 340. And I think 380 on the S&P 500, which is a 10% correction, I think that makes a lot of sense. However, if you look at a lot of these companies like Apple, right, you look at Apple from a trading perspective, Apple looking freaking phenomenal from a trading perspective, and also from just flow. There's been so much money hitting Apple over the past couple of weeks. You look at Facebook has been doing well. You look at Microsoft doing well. You look at Netflix setting up pretty well, holding the same support. So overall, I think that we could potentially see this pullback going into earnings in July, which makes a lot of sense. But it's definitely something to watch out for. However, it doesn't mean that you just start getting puts or that you abandon, you know, whatever strategy got you to the game. It just means that you, as a investor, keep some cash on the sidelines. Like as a long-term investor, I'd have 20-30% on the sidelines. And as a trader, you continue to trade with the flow, but maybe you use tighter stop losses. Maybe you focus more on selling puts, which is what I do. Maybe you take a less aggressive approach so that you have cash when, you know, ultimately crap does hit the fan. Because at the end of the day, no one's going to be able to time the exact downfall of the market or what it's going to be. You know, nobody would have expected the Rona to happen, right? But overall, I do agree. I don't trust the market going into the next 6 months. I don't think we're going to see a catastrophic collapse, but a 10%, you know, overall correction is needed, and I wouldn't mind it. So guys, overall, thank you for the support. Hit the like button, subscribe. If you want to get access to the free course I just created and put out over the weekend, use the link down below. It's 100% free. All you got to do is just hit the little button, start now. It's about an hour and a half long, teaching you how to trade without fear, cutting your losses, becoming an expert at your craft, executing your systems to perfection, thinking in probabilities, and monitoring yourself. Guys, thank you for all the support. Hit the like button, subscribe, and I'll see you next time. Peace.